Hello, everyone. Welcome to the market opening bell on Friday, July 4th, your 10-minute guide to the stock market. Markets are waiting U.S. non-farm payroll data and the Big and Beautiful Act, coupled with a decline in China's June Caixin Services PMI, leading to a softer performance in Hong Kong stocks on Thursday. The Hang Seng Index opened 12 points higher, briefly rising 47 points to 24,269 before retreating. It fell as much as 301 points, hitting a low of 23,920 and closed down 151 points or 0.6% at 24,069. The A-share index dropped 76 points or 0.9% to 8,648, while the Hang Seng Tech Index fell 35 points or 0.7% to 5,233. Total market turnover was 231.2 billion Hong Kong dollars. Southbound trading volume reached $127.8 billion, with southbound funds recording a net outflow of $3.048 billion, marking the first net outflow since May 26. Notably, net buys include Meituan totaling 987 million, SMIC 478 million, Innovent Biologics 241 million. Net sales include Alibaba totaling 3.226 billion, Tencent 885 million, Akasol Biopharma 739 million, Popmart 377 million, Guotai Junan International 203 million. Statistics show southbound funds have net sold Tencent for 24 consecutive days, totaling 23.409 billion Hong Kong dollars. Alibaba for 4 days, totaling $6.308 billion, while net buying SMIC for 10 days, totaling $6.421 billion, and Meituan for 3 days, totaling $1.702 billion. Technically, the Hang Seng Index briefly dipped below the 10-day and 20-day moving averages, both around 24,008 points, but closed above them. In the short term, it will continue to test whether it can hold these levels. If it fails, it may retreat to fill the gap, the June 24 upward gap, spanning 144 points between 23,689 and 23,833. Mainland Chinese markets fell initially but later rose. The Shanghai Composite Index hit the low of 3,446 and closed at 3,461, up 7 points or 0.2%. The Shenzhen Component Index reached the low of 10,431 and closed at 10,534, up 122 points or 1.2%. Combined turnover for both markets was 1.3097 trillion yuan, down 67.2 billion yuan from the previous day. The renminbi central parity rate was 7.1523 to $1, the highest since November 8, 2024, up 23 pips from the previous day. For June, Caixin China Services PMI fell 0.5 points month-on-month to 50.6, the lowest since October 2024, but remained in expansion territory for the 30th consecutive month. Caixin Insight Group noted that mainland service sector activity weakened last month, primarily due to a sluggish global environment, which slowed new business growth. Trump announced a U.S. Vietnam trade agreement with the U.S. imposing a 20% tariff on Vietnamese exports to the U.S. at the lower end of expectations, and a 40% tariff on transshipped goods. In contrast, the U.S. enjoys tariff-free access to the Vietnamese market. This news benefits Tetronic Industries, as 65% of its revenue comes from the U.S., with nearly half of its U.S. sold products manufactured in Vietnam this year. With the group accelerating capacity shifts to Vietnam and increased sales of its Milwaukee Professional Series, revenue is expected to grow by about 7% year-on-year. Crystal International 2232 is primarily engaged in developing and manufacturing apparel products, including casual wear, denim, intimate apparel, sweaters, sportswear, and outdoor clothing. With North America accounting for nearly 40% of its revenue, it has significant production facilities in Vietnam, and its self-built fabric factory in northern Vietnam began construction by the end of 2024. Yuan International 551 manufactures footwear for brands like Nike and Adidas with substantial operations in Vietnam. The agreement's clarity and manageable tariff rates alleviate supply chain cost pressures, potentially enhancing its business outlook, though U.S. revenue accounts for only about 19% of its total. Prosperous Industrial 1731 is primarily engaged in manufacturing and selling sports bags, handbags, and luggage, with the U.S. accounting for about 27% of its revenue. Its production facilities in Vietnam and Cambodia represent over 85% of its total capacity. Yuan holds a 22.5% stake in the company. FIT Hong Kong 6088 focuses on manufacturing and selling mobile and wireless devices and connections for communications, computers, and automotive markets. Its direct holding company is Foxconn Far East, a wholly owned subsidiary of Hon Hai. The U.S. accounts for nearly half of its revenue, and it has significant production facilities in Vietnam. J&T Global Express 1519 entered Vietnam in 2018 and now operates express delivery services across 13 countries, including 7 Southeast Asian nations: Indonesia, Vietnam, Malaysia, Philippines, Thailand, Cambodia, Singapore, China, and 5 emerging markets: Saudi Arabia, UAE, Mexico, Brazil, Egypt. It is the top-ranked express operator in Southeast Asia. KLN 636 performed strongly in Southeast Asia in 2024, particularly in fast-growing markets like Thailand, Vietnam, and Indonesia, as Chinese cross-border e-commerce sellers reliant on the U.S. market accelerate supply chain adjustments by relocating to other regions for localized production and distribution. Intra-Asian trade and overseas warehousing demand are expected to rise. KLN will actively leverage its diversified market presence, including extensive overseas warehouse networks and air-sea transport systems in Southeast and South Asia, the US, and Europe, to seize new opportunities from supply chain restructuring. The newly listed stock, Enjoy Food, closed at 59.6 Hong Kong dollars in Phillip Mart's grey market, down 0.7% or 40 cents from its IPO price. Excluding fees, a 100-share lot would yield a paper loss of $40. Today is the U.S. Independence Day holiday, and U.S. stock markets had their half-day trading session on Thursday, July 3rd. Following stronger than expected non-farm payroll data, the Dow Jones Industrial Average closed at 44,828 points, up 344 points or 0.8%. The Nasdaq closed at 20,601 points, up 207 points or 1%, and the S&P 500 closed at 6,279 points, up 51 points or 0.8%. Both the Nasdaq and S&P 500 hit new closing highs. The Nasdaq China Dragon the Nasdaq Golden Dragon China Index, reflecting the performance of Chinese concept stocks, rose 0.4% by the close, though Alibaba fell 1.8%. Nvidia stock surged as much as 2.4% intraday, pushing its market cap close to $4 trillion and closed up 1.3% at $159.29 per share. Other major tech stocks also generally rose, with Microsoft and Amazon both up 1.6% and Apple up 0.5%. According to Counterpoint Research, iPhone sales in China grew 8% year-on-year in Q2 2025, marking Apple's first growth in the Chinese market since Q2 2023. This was driven by discounts on the latest iPhone 16 offered by Chinese e-commerce platforms and increased trade-in values for some iPhone models, with strong consumer response particularly in the week before the 618 shopping festival. Tesla, which had surged nearly 5% the previous day, gave back 0.1%. U.S. June non-farm payrolls added 147,000 jobs, far exceeding the forecast of 110,000, with May's revised figure at 144,000. The unemployment rate slightly declined from 4.2% in May to 4.1%, beating market expectations of a rise to 4.3%. Additionally, for the week ending June 28th, U.S. initial jobless claims fell by 4,000 to 233,000, below the market's estimate of 240,000. U.S. factory orders in May rose 8.2% month-on-month, in line with market expectations, fully offsetting the revised 3.9% decline from the previous month and marking the largest order increase since 2014. The Institute for Supply Management (ISM) survey showed the U.S. services PMI rising to 50.8 in June from 49.9 in May, surpassing the forecast of 50.5. This indicates that service sector economic activity returned to growth in June after contracting in May. The S&P Global Service Business Activity Index for June was 52.9, down from 53.7 in May, reflecting slightly slower but still robust growth. The index has recorded growth for 29 consecutive months. Our stock pick today is Pegbio, stock code 2565. Pegbio is a biotechnology company focused on the independent research and development of innovative therapies for chronic diseases, primarily peptide and small molecule drugs, with a key emphasis on metabolic disorders. The group has independently developed one core product and 5 other candidate products to capitalize on market opportunities in common chronic and metabolic diseases, including type 2 diabetes mellitus, T2DM, obesity, non-alcoholic steatohepatitis, opioid-induced constipation, and congenital hyperinsulinemia. The group's core product, PB119, is an independently developed near commercialization stage long-acting glucagon-like peptide receptor agonist. GLP-1 receptor agonists are drugs that activate the GLP-1 receptor, mimicking its functions, which include promoting insulin secretion, inhibiting glucagon secretion, suppressing gastrointestinal motility and appetite, and enhancing glucose uptake and fat breakdown. PB119 is primarily intended for the first-line treatment of T2DM and obesity. It has demonstrated multiple benefits in clinical trials, including improved blood glucose control, cardiovascular health, and effective weight management. According to Frost and Sullivan, long-acting GLP-1 receptor agonists, such as PB119, require a once-weekly dosing schedule, while short-acting GLP-1 receptor agonists require daily or multiple daily doses. The group aims to develop PB119 as a high-quality, affordable domestic alternative for patients in China. Given the multiple benefits shown in PB119's clinical trials, the group expects it to be a competitive product in the market. The new drug application (NDA) for PB119 for T2DM treatment in China was accepted by the National Medical Products Administration (NMPA) in September 2023, marking a significant milestone toward commercialization. In September 2024, the group entered into a commercialization partnership with a leading domestic pharmaceutical company in China that is at the commercialization stage. Through this partnership, the group expects to leverage the partner's decades of market experience, expertise in China's rapidly growing healthcare sector, comprehensive market access capabilities for its product portfolio, and a sales network covering both higher and lower tier markets to achieve broad market penetration in China. For overseas markets, the group plans to unlock asset value through commercialization partnerships with local partners. It may also seek collaborations for clinical research and development in the US and Europe, and explore other overseas markets in Belt and Road countries, including those in the Middle East and South Asia. Recommendation: buy at 10 Hong Kong dollars, target price $11, stop loss at $9.5. I do not hold the above stock.